If I told you that today there are more houses on the market than there have been in the past 5 years, would you believe it? Well, stick around, we'll talk about the truth next. Hey RT family, Ryan Reynolds here with Keller Williams Consultants Realty and your February real estate market update for Greater Central Ohio. So what are we going to talk about this month? We're going to talk about the same three things that we talk about every month, and that would be inventory levels, mortgage interest rates, and of course, what is my house worth this year versus what it was worth last year. So we'll go ahead and jump into those now. The first thing we're going to talk about is inventory levels. And in the opener, I teased that we are at our 5-year high. And that is true, but that represents actually a 36.1% increase versus 2024 January, end of January, and a 2.2 month of supply. When we put that in perspective, a balanced market would be somewhere between 4 and 6 months of supply, and a buyer's market would be above 6 months of supply. So even though we have more houses on the market today than we have in the past 5 years, we actually still are sitting in a seller's market, though it is a mild seller's market. It's also significant that in October of 2023, we peaked out on interest rates and people took their houses off for the holidays. And I think they were a little bit slower in 2024 in bringing them onto the market. There was sort of a rush in that period of time for houses, but I think there's probably not a lot of meat in that data. It sounds scary in some ways, but it's actually pretty much not too much to talk about. As I mentioned, that's 2,893 homes on the market, which when you think about Columbus having around 1 million people, 2,800 houses doesn't sound like very much either. So that is inventory. The next thing we're going to talk about are interest rates. And when we talk about interest rates, this is even less exciting than the inventory number is, because at least the inventory number sounded exciting. Compared to last month, we are down 0.1% in interest rates on average. The mortgage rates have fluctuated a little bit over the past month, but very little. Some of the headlines I've seen are essentially making a joke out of how little the interest rates have been moving. Now, long term, we're still expecting those interest rates to decline. This year, we're only expecting a couple of reductions from the Federal Reserve, which again does not directly impact mortgage interest rates, but that impacts the bond market, and the bond market is what impacts interest rates. We're expecting maybe by the end of the year to be down around 6.5. Probably by mid to late spring, we're going to see our first reduction. I think they're looking at June actually, so it's really almost summertime by the time we get our next reduction. So that's what's going on with interest rates, not a whole lot. The last thing we're talking about are home prices. Now, if you thought the first two numbers were exciting, the next number is even less exciting. Last year, between January of 2024 and January of 2025, prices were up 2.9%. Now that is around half of what it was up in December. If you remember, we were around 6% year over year. So statistically, what are we talking about here? Well, I think what we're just seeing is minor fluctuations that are changing. Interest rates are up about the average sale price is up about the same amount as inflation. And so we've seen that cooling off. What we really need, I think, for the real estate market to take back off, to make it unbearable for buyers basically, is if interest rates come down and they come down more quickly. One possibility for that to happen is that there is a difference between the 10-year Treasury note and the 30-year fixed mortgage. That margin is what we call, or the spread I should say, is what normally is around 1.7%. So that number has been pretty consistent over history. It's kind of fluctuated, but it's always come back to that 1.7%. Today, we're sitting at still about a 3.1% difference. So what does that mean? Well, that means that there are still uncertainty in the market, and this real estate market, or the mortgage interest rate market, I should say, is baking in some additional risk. Likely that's due to the change of administration and all of the changes that have been happening to our government or with our government in the past month. So that's all I have for you this month. Not a whole lot to talk about, which is actually kind of good. When we have crazy things to talk about, then it gets more exciting, but it also makes things a little harder for some people. So hope you have a great month. If you have questions about your specific situation and how you take advantage of today's market, feel free to reach out. As always, I'm Ryan Reynolds with the Ryan Reynolds team. Unlimited opportunities and exceptional experiences.